Hi, welcome back. You're with your stocks. The next query that we're getting in is from Mr. Nagarajan R. He has written in from Chennai. He says he has 310 shares of Newland Labs, which he has bought at 2775 and now wants to know what to do. Vaishali, Newland Labs, what would you recommend?
So I would say keep a stop loss of 2400 because this stock has run up right from 1000 levels and now it is showing some signs of profit booking. So if 2400 levels break, then we could see further more selling pressure. Till then, one can hold.
Okay, so remain invested for now. Parthiv, what are the fundamental triggers for Newland Labs for somebody, who's currently holding on, and what is the recommendation? Does he remain invested?
See, Sumina, the reason why Newland Lab as a stock has done so well in the pharma space is because of continuous increase in their orders for the custom manufacturing solutions business. This is a business model that they've adopted, which is niche, and not a lot of other pharma peers adopt this. And they've done really well. They've gained good customers. They are talking with a lot of customers and a lot of big players in the generic pharma space like that of Teva, and they have been supplying APIs and a lot of intermediates to companies like Teva. And going ahead, they have a very strong pipeline of working on R&D based molecules for the API space. And we have seen companies like Divi's, how well they have carved out a niche in the API segment business, which otherwise is supposed to be a low margin business. And probably it seems that Newland is trying to focus on similar footsteps. So no doubt the stock has run up a lot. The stock valuations are expensive, but if I were to look at the next 3 years prospect for this company, they are looking extremely good. And the way the pharma sector overall is doing, I believe that there's still more legs for Newland Labs to do better for you and create more shareholder value.
Okay, so remain invested for now. The next query is from Deeptarag Datta. He's written in from Mumbai, and he says he has 35 shares of Alkyl Amines at 3950, a long-term investor over here, and wants to know what to do. Vaishali, at these levels, what should a person do?
I think one can hold because there is something definitely to this stock. We have been seeing the stock right from 5,500 and it's a perpendicular rise. So keep a trading stop loss of 7,200 and hold the stock. I won't be surprised if we see levels of 8,500 to 10,000 in near term.
Okay, and by the way, the market is moving to the day's high, so over 1.5% higher now on the Nifty. And look at Bajaj Finance almost running away with it. It's an 8% move over there. Okay, the next query today comes in on Jyoti Labs. Wow, a lot of people looking at these stocks. Sandeep has written in from Bengaluru. He has 500 shares of Jyoti Labs at 151, and he wants to know what is the target for the month of May. Vaishali?
So, this is purely a trading strategy with a stop loss of 140. One can hold, and since he's already bought at these current levels, he can expect a target of around 165.
Okay, and the next query comes in from Abhijit K. He has written into us from Kochi. He has investments in Kalyan Jewellers and IRFC. So he says they are the only two stocks in his portfolio which are currently making a loss. He has bought Kalyan Jewellers stock at 87 and he has bought IRFC at 24 rupees. He wants to know, should he continue holding on to them despite the fact that he is making losses? Parthiv?
See, Sumira, very frankly speaking, looking at Kalyan Jewellers, and we're looking at its even past track record during the IPO and their return ratios that they deliver, they're not at all compelling. And the rate at which the valuations at which the IPO came, I think it was simply taking advantage of the market euphoria. And we saw what happened post that. And again, fundamentally, we are not very bullish on Kalyan Jewellers, and especially in the jewelry sector, where there have been a lot of corporate governance issues which has checkered this sector. I think it's best to go with a very distinguished name, which is Titan. I think Titan is something which is done fantastically well, not only in the jewelry segment, but even the watches and the eyewear segment, which are growing extremely well. And this is a company which over the next 4 to 5 years is aspiring to touch a top line of almost 50,000 crore. We have visibility, we have great management pedigree, great track record, very good return ratios, and sustainability in such challenging times. So I would suggest a switch from Kalyan Jewellers to Titan. Talking about the other stock, IRFC, again, this is a public sector enterprise which caters to the railway. It's an NBFC, basically a very good business model. And if you look at the past track record, never had any spate of major NPAs because it's backed by Indian Railways and they are the AAA rated company. So no doubt, I think the stock has not really done well. But looking at the current return ratios and more importantly, looking at the dividend yield, going ahead, I am quite confident that the investor will be able to recoup his price and also see some returns on this stock. So I would suggest a hold on this company.
All right, Parthiv, Vaishali, thanks very much for joining in and for advising all of our viewers. We're going to wrap up then on your stocks for today. But as we do that, we leave you with some interesting opinion that has come in from Sridhar Shivram of Inam Holdings on the market and what he expects going forward, as well as his sectoral preferences. Thanks very much for watching.
We would see some sort of a time correction. So what we are seeing is a time correction. The market may not have corrected much, but it's also struggling to get past its earlier highs. And the fact that there is gloom around earnings, at least in my view, will surely be downgraded. I think the consensus earnings for the current year is somewhere in the range of 30-35%. I don't think that's happening. So I think there will be a time correction. And we don't know, depends on how the US markets behave, because that's the mother of all markets. If we see a correction there, we will see a correction in other emerging markets too. So I think if there is a consolidation, it's good even from the health of the market. I don't see the markets running away. There is a lot of headwinds right now. We are better off with the large banks and better to avoid NBFCs, MFIs, and many of the others in the financial pack. Because the ability of the larger banks to control their NPAs, to raise capital, to provide excess provision at tough times is much better. We're already seeing some NBFCs approaching a Reserve Bank for extension of moratorium and things like that. So I think at this stage, I think there is a possibility that given all the lockdowns that we are seeing, the economic activities have significantly come down. This could show up in some sort of NPA numbers in 3 to 6 months to come.